welcome to value pricing for bookkeepers, or I actually started to call it rate sizing, which you see up there. Let's get on the right screen. So there's myself. I am Tanya Hiltz, for those of you who don't know me. I'm the founder of Cloud Bookkeeping Services and Tanya's Bookkeeper Bootcamp. I've been in business since 1997. I've been working with QBO since 2012. I embraced cloud technology, however, in 2014. There's a very big difference between working with it and embracing it. I implemented value pricing in 2015, and I tripled my sales in the first 12 months, partly due to the value pricing, partly due to actually embracing the cloud as well. And I'm a 2016 Black Swan sponsored by Intuit. Okay, so a little bit about my story. So I chose to specialize in QuickBooks Desktop originally, as my niche was a small entrepreneur, and QuickBooks really seemed to be more targeted to my market. I reactively started supporting QBO in 2012, simply just due to the demand of my clients. And I used to like the desktop product. And then I spent the next year focusing on learning all about cloud accounting, apps, value pricing, and how I could transform my practice from data entry into data management. I implemented everything I learned and tripled my sales within a year, and I'm on target to double that again this year. Clients liked what I started to offer, and then like-minded clients began to spread the word. And I don't pay for advertising, so this is just all strictly just the services and my pricing that I've been able to start to offer the clients. I freed up more time to be able to utilize all that was now accessible to me to help my clients grow their businesses as well. And I refound the passion, as let's face it, what we do is mostly data entry, and it wasn't what I was passionate about. So, you know, with using the cloud technology and the apps, I was able to refine that passion. And then I became the Intuit-sponsored Black Swan in 2016, mentoring under Ron Baker in the IBC Black Swan program. And my practice has now grown from just me to myself and 3 employees. And that's just within the past 18 months. And now I can work anywhere where there's internet. So although I chose QuickBooks products, that was just my tool of choice. The value pricing formula I discussed today can actually be used with any accounting software package, traditional, desktop, or cloud-based. When you use a compatible cloud-based software, however, and integrate all the apps and time-saving tips I'll be reviewing, you can actually be a lot more efficient and then substantially increase your bottom line. So why value price? With hourly billing, we're penalized for our increased experience, for being faster at processing, for having increased knowledge, for having more certifications, for being experts in our fields, for leveraging current technology, for offering the client more value, for offering custom solutions for each client. And if we were employees, we'd be rewarded for all of this. So I like to call value pricing right sizing. It's the right client with the right solutions for the right price. Now, right sizing is a win-win situation. What the client gains is they agree in advance as to what solutions we'll provide to them. They'll agree in advance as to what price they're willing to pay for the solutions. And then we can also teach the client to right price their services, which increases the value that we provide to them as well. With right sizing, we gain agreeing in advance as to what solutions we'll provide, agreeing in advance as to what price they'll pay for our services. We now know what our monthly recurring revenue will be. We're being paid in advance for our work. And there's incentives for us to gain more certifications and to leverage the most current software and complete the work in the agreed upon time frame, as we're no longer penalized for our speed. So anyone can right size using any software. So again, right sizing could work if you're using any desktop software. However, by leveraging the most current technology, you can increase your productivity while decreasing the time you're working on the file, all while still charging the same fixed rate as the client is still obtaining the agreed upon outcome. So the whole idea behind this concept is to have the client focused on the outcome rather than how long or how you achieve the desired results. So what tools do I use and how do I use them? I use QBO as my main accounting software. I use 17 Hats for quotes, contracts, workflows, and automatic emails. I use HubDoc to pull in the bank statements and have clients submit receipts via the mobile app. They can snap pics or email forward. I use Rotessa for pre-authorized withdrawal. I offer options of the 1st or the 15th of the month, and I collect the payments in advance. And I do use Invoice Sherpa. So Invoice Sherpa sends invoices and is an AR follow-up. It's used for about, the AR follow-up is used for about 15% of my grandfather clients. But otherwise it sends the invoice, and then once they've paid, it sends them a really nice email after saying thank you. Your invoice is paid in full, and of course that's free to pro advisors, so it's great for us to use. And then I also use that to offer accounts receivable packages as part of my plan options to clients that may have cash flow issues. So time-saving cloud accounting software features. So bank rules, items such as bank fees, interest charges, automatic loan payments for like daily merchant deposits for clients with a non-integrating POS or an old-fashioned till. You can set up the bank rules to automatically deposit the funds and then just offset those against a monthly sales receipt. So I've got one client alone. I set that up, and it saves me the one client 2 hours a month, just simply due to the amount of deposits she has and the type of business. And then on average, it's about an hour savings for my other clients. So again, they're focused on the results, not how I get there. So I'm able then to take that time and be more productive with that time. Recurring transactions. I use the recurring transactions for recurring items or templates for frequently used journal entries. So for example, when I'm using an external software for manual payroll, I do have a few clients that we've got set up in either QB Desktop or WagePoint or whatnot for different purposes for their payroll. So I've got my templates automatically set up. So again, that's time saving. And on my own, my recurring invoices, because almost everybody's on a fixed rate, the invoices just automatically occur by themselves, get sent out, and then the payments automatically happen through Rotessa. So it's the recurring transactions is really, really good. So with value pricing, it's still important that you educate your client. You need to educate them on the services you're providing, and so the value that you provide. As well. You'll need to educate them on the options that you provide to make sure that you get them on the right plan. Your software costs should definitely be included as well, because depending on what solution you come up with a client, you do need a form of recouping your software costs. So that needs to be taken into account when you're coming up with a price. As well as the time that it takes you. And yes, I will show you how you can price it without actually using a time clock. Your profitability, you'll need to know what your profitability is. And of course, your bottom line, what you're willing to take as a bottom line and to walk away and potentially lose that client over. So Ron Baker suggested in his book, Implementing Value Pricing, that you value the items based on the following percentages. Hours times base rate, a fixed price of 10 to 20% surcharge. So absolutely, when you're giving a fixed price, that definitely is of value to the clients to know what their price is going to be and to not have that fluctuate so that they can budget for that every single month. Change orders, a 5 to 10% surcharge. So what that means by change orders is, those extra little things that they throw at you from month to month. Hey, can you pull this report? Can you do this? Oh, yeah, we've got, a high turnover this month, lots of ROEs. So, that type of stuff can be taken into account. So add a 5 to 10% surcharge for those. Of course, anything that is going to be time consuming, make sure that that you do let the client know that, you know what, this is out of the scope. This project is out of the scope of the initial, your initial price package. Maybe you should bill for that one separately, or you should take a look and increase the price plan accordingly. A value guarantee, 15 to 30%. So people will pay more to have a guarantee. Think about it. If you go and you purchase a new computer at Best Buy, you're paying more for that extra warranty. This is the same type of thing. And we're all providing this right now. I guarantee it, that we're all providing that, you know what, we will, if there's anything wrong, we're going to go ahead and we're going to take care of fixing it and making it right. So why shouldn't you have that incorporated into your price? Payment terms, 5 to 10%. Of course, what this could be is your traditional payment terms, or and of course, then that would cover your, merchant fees or your Pluto fees or Rotessa fees. But also payment terms, you can get creative with your payment terms. Maybe you have a seasonal client who, they do more of their work, their landscaping. They do more of their work in the spring, summer, and fall months. So maybe you could get creative with your payment plans for them and offer them 6 months of payments versus a year. So you're going to double your payments for those 6 months, but then you're still going to do the little bit of bookkeeping they have on their off season. That way they're still caught up, they're still current, they're still in compliance, but they're not having to pay when they don't have the income to be able to offset that. So, and those types of payment terms definitely will be of value to the client. Unlimited access, 10 to 20%. Now this sounds scary. It did to me anyway. When I first started offering these with unlimited access, I thought, oh my gosh, I'm in trouble now. But this is what Ron said to do, so let's do it. And what I did find out is that, there were a few clients that I was asking for trouble with that, but I didn't price them correctly in the beginning. When you've got the right client priced properly with the right price at the right plan, this is a non-issue. You'll deal with them a little bit more at the beginning when you're getting them set up. You're teaching them the software. You're working in a process and a flow that works for them. But I now have clients that, once 6 months have gone by, I'm reaching out to them, every couple of months just because I don't hear from them because everything is going so smoothly, or they just send me a quick email if they need something quickly. So again, when you've got the right client for you, at the right price with the right plan, you don't hear from them much, so that unlimited access is nothing to be scared of. But again, is definitely of value to the client. You need to take into consideration your apps and your add-ons, and then you can calculate the hours from the balance sheet versus by a time clock. And then you also need to take into account your gut price. If you've heard Ron speak, he talks about gut price all the time. Excuse me, and that's of course, some of us, if you have a feeling the client might be able to have a higher value on your service, or might be a little, have a built-in PITA fee, or I think we all kind of know clients like that. Or maybe you've got these clients that you think, they're really, really good clients. I think I can work well with them, but because they're just starting out, they don't have the budget. So maybe your gut is telling you, let's maybe go a little bit lower to help them out because you can see a good long-term relationship. So you need to put a little bit of flexibility into your price for the gut pricing. And then this means that you're valuing your expertise at anywhere from 45 to 90% and are charging an appropriate surcharge for this. So I've been able to figure out an easy formula to help come up with that. So we'll do the little happy dance. So we're just going to do a demo of the template that I've created with the formulas. And I will blow this up because I know in past sessions with Jesse, it works better if I've got it larger for the template. So this here is, it's just a 4-sheet template. This here is just the front page. This is just kind of where I started. I've got my 3 plans. I have my in the middle option here. Let me just check my pen. So in the middle option here, you'll see everything is bolded. It's a little more gray because that's the plan that you want to stand out to people. Let's see. So Okay, so that's a plan you want to stand out to people, but you put your highest price plan first. So you should have your 3 plans, give the clients options. The middle plan is where I want my clients to go. So 80% of your clients will likely fall within your middle plan, but I do have options for somebody who maybe, they don't want everything. They want to do a lot more in-house themselves, or they can't afford the middle plan, so they can start off with still getting a little bit of support. And then you've got the diamond, and the diamond package would basically be for people who want an in-house full-time bookkeeper. They want me at their beck and call to handle everything for them. Again, that's not the type of client I want, but hey, the pricing is there, and if it's the right price, I just might do that. So down under the fixed plan options, these are just some samples here that I've just got, accounts receivable, some of the things that I've done here. These can all be edited. You can delete this. This screen is fully editable. So that way, if you did happen to use a template or something similar, again, you could change these per client. I don't do this anymore. I just use this to get the base price because I now put it into 17 Hats, and 17 Hats sends them the quote. But I did used to actually use this sheet. I used to print it out, and it had their prices up top. So again, these are just some samples, accounts payable, reconciliations. You'll see in the silver package, I'm not doing any AR, AP, or processing of receipts. They can do that. I'll teach them how to do that. I'll give them access to some training to be able to do that. But otherwise, I'm basically doing, remittances, reconciling, more compliance type work, and then a little bit of, obviously, a little bit of advisory to make sure they're on the right track. People on this plan, you're not going to get as quick as a response time because obviously you want to be able to keep that for the clients that are paying more. The middle package, again, this is the way that I start with. Again, that's more of I'm dealing with, possibly a little bit of receivable, definitely dealing with the expenses, government remittances, clients may or may not have payroll. Obviously, that's not just the top clients that would have the payroll, some year-end. So again, I just kind of play with this training. Some clients will get unlimited training. Some will just get, limited 5 hours a month. I don't really kind of stick with this anymore. Because they're usually, again, they don't really need it. And then, again, your top plan, they just kind of got everything down the list. And you'll see here, also the top plan, they're getting quote, the more they pay, the more reports they're getting. Might be getting, unlimited versus, unlimited phone versus, just limited phone time and email and whatnot. And Dan Carry alone is here, but I've actually got a spot for cleanup work. So I will show you how you can actually go ahead and quote for cleanup work, which I think is the hardest thing when you've got, client walks in with just a box. How do you price for that? And I'll be able to show you how you can price for that. So on this sheet here, actually we'll go to the last one, client quote. Again, I don't use this, but when I did use this sheet, what I would do is I would just kind of put in their date, their name, the phone number, their address, the price I quoted before HST, and any additional details of what apps were in it or whatnot. But again, because I'm using the external through 17 Hats, I don't use this anymore. Rate sheet. This is where we're putting all of the pricings in for the apps, for our base rate. And then the worksheet, this is basically kind of where I've got this narrowed into a point system to make it easy. So we'll just go through these sheets here, the rate sheet and the worksheet, and then we'll do some sample quotes. So the software, so under the base rate, first off, this is actually, so anything in blue does actually require to be filled in. If there's nothing in it, then whatever is in there will not calculate. So you've got your base rate. Here is just the QBO. Here is, some receipt bank, invoice Sherpa, HubDoc. So I've got my prices. In the blue is the prices I charge the client. I did want to see what the wholesale is. I've got my wholesale cost, the retail cost here, but it's the blue. Regardless of any of these columns here, it's whatever is in the blue actually goes into the calculations. There's other software subscriptions. So if you're using something, let's say you're using LivePlan, you can type LivePlan in here and then type in, I don't know, like $15 a month, whatever LivePlan is, And then when you pop over to here, you can see I've just entered live plan. So if I put something in this field right here, it'll actually take that $15 into account for this. You can enter the plan names here. So as these change, Cadillac, they change on the client worksheet here. So again, it's nice and versatile with that. And then additional items. So these here would be any additional type items. Let's say we want their personal income tax included, an AR package, something like that. You can just go ahead and add this here. And again, just put the annual price in here. So now I've got some tips and tricks here. We're just going to go through all of this stuff. So first, the rate sheet instructions. So the base rate is before your value added percentages are added. So if you've already started value pricing yourself and you've already upped your hourly or base rate, it actually could end up inflating your rate even more, and so you don't want to price yourself out. So again, the base rate is what your regular hourly rate would be before you start value pricing. So I'm at $37.50. This is where I stand right now for the area that I'm in. Now, if I'm quoting for Toronto, because of course I'm 3 hours outside of Toronto in a little rural area, if I'm quoting Toronto, this is probably going to be more like $65 an hour. But again, that's before the value pricing surcharges go on top of that. Let's see here. So client sheet instructions is just that we've got the form is fully editable for your client. And let me bring these a little bigger here. Okay, that should be good there. Okay, so the fixed and value pricing tips. So here we go. These rates are built so that they're in the middle of Ron Baker's suggested value surcharges. So it's rated, I guess, a midway point is about 75%. So that way there's some flexibility as well. These rates, I guess it's recommended for something you have a leniency of about 15% either way based on how you perceive the client values your services. It's also recommended that your walk-away price is no less than 15% off the recommended price plans. You could go higher. Just remember, once you start to dip below a certain level, you'll actually make more if you just build hourly the old-fashioned way. So there's really no point to you value your fixed pricing. So I mean, I really at a bottom, I probably wouldn't go. I mean, I don't go below 15% lower than these rates. I probably wouldn't suggest anybody go lower than 25% lower. But again, they would have to be a client that you see an extremely long-term value out of. Excuse me. You should price the lead when you're not with them. So that way you can ensure you're comfortable with the amount you're quoting them and they've taken all the information into account. I will tell you, I have learned the hard way. The clients that I price when I'm with them, they end up, everybody tries to negotiate. I haven't been able to make myself comfortable and be confident with my price. So every single time, if they try to negotiate, I let them negotiate me down on price, not on service. So I do not quote them when I'm with them anymore. I take all of the information and I formulate the price. I, talk to, maybe Leanne in the office who works with me about the price. But otherwise, I trust the sheet now. But I still have to build myself up, and so you talk your confidence into yourself. And then when you'll come across more confident on the price as well. And then the clients tend to not try to negotiate as much because you're also coming across as confident. If the customer wants to negotiate further, negotiate the services and have the client do more or take some services out of the package. The client may not value the services that you offer. Review what it is that you're providing to them and what is important to them. You may have included items that are not of importance, and simply by changing that service for something else that's of equal value to you, you might be increasing the value to the prospective customer. And not everyone will value what you do. You need to determine your minimum and stick with it. Now I'm going to go off script here I guess it's in all of my scripts, but do a little bit of an anecdote here just to say, just to try to reinforce the importance of determining your minimum and sticking with it and realizing that not everybody values what you do. So one of my best friends, we've been best friends since grade 10, our kids are our best friends as well. And her services, she's in the beauty field, and her services are actually billed out at almost $200 an hour by her employer. She knows what I do very well. And I actually helped her boyfriend set up a taxi company in the city that they lived in. Just lots of free advice, lots of getting everything set up. And then when they were ready, they said, okay, we're ready to go. We want you to do the bookkeeping, Tanya. We know you're going to keep the government off our back. You're not going to mess around. Everything is going to be, done perfect. You're going to keep all the headaches away. We want you to do this. So this taxi company at that point was bringing in $7,000 a month. Expenses were minimal, and so I quoted them not based on what they were bringing in. I think I quoted them $300 a month. I went low, very low, just strictly because I knew them. I wanted to make sure to cover the cost of myself, of anybody else that could be working on the file. So what happened was she just kind of chuckled and laughed at me, and she's like, Tanya, she says, that's too much. And that was based on my minimum or my middle price. So I said, okay, Michelle, here, let's do this. I'll teach you guys to do all of this stuff. I'll just go in monthly. I'll do some reconciling. I'll keep you in compliance. We'll do this. And I quoted that at $250. Again, much lower than I would for anybody else with the amount of work that was involved. But it was basically a cost type of thing. And she laughed at me, and she said, Tanya, all you do is add numbers. And let me tell you, my jaw hit the ground when I realized that somebody that close to me, whose services were billed out and who I would have assumed would have realized the value of services and of education, because to do what she does, you have to be highly educated as well. She's dealing with liposuction and Botox and stuff. So there's a lot of licenses that you have to have as well when you're dealing with that. And she had no value at all, no value, or did not value at all what I did. So like I say, I was quite shocked at that, but it was definitely an eye-opener, and that made me realize that, yeah, not everybody will value what it is that you do, and you won't be able to guess who that person is. They might shock you. So determine your minimum before you price them, and stick with it. So pricing the apps. You're really not going to make any money on the apps, and that increases your price. The value should be on the services you provide. So I do recommend that you cover, at least ensure that you've got your costs of your apps covered. Some apps also give different pricing levels depending on the number of clients that you have with them. It is recommended that you use your base price, as if you have clients that are removed from those apps, you'll lose your discount and you could end up paying more. So HubDoc, for example, I do believe it's 10% discount once you hit 10 clients. If you are at 10 clients, you work at everybody a 10% discount to give them your full wholesale cost, and you lose one client, all of a sudden your profit is now affected because you didn't take that into account. So if your base price, with only one client without those level discounts happens to be $25 for that app, then that's what I charge. So I definitely recommend that you do something similar. And round prices, round them to the dollar for monthly prices. Rounded numbers are definitely more pleasing to the ear for sure. Monitoring accounts receivable and payroll. So should you decide to package in, and monitor your AR or your payroll for your clients, don't forget to include the cost of the apps you'll be using for these tasks. So let's say you said to your client, I'll monitor your receivables and I'll do that for $50. Well, if we look over here, you'll see that the cost of Invoice Sherpa, it's $49 US for a client. It's got US pricing. So you're not going to be covering your cost. So you want to make sure that you cover your costs. So maybe, $100, $125 a month will cover the cost of your app, plus give you some. And let me tell you, you said it, you forget it, the app takes care of most of it. So it's not like you're really going to be doing a lot of work on it as well. Variance. With true value pricing, some clients might value your services slightly lower, possibly due to budgetary reasons, but these clients in all other aspects would be a good fit for you. Alternatively, some clients may value your services more and be able to pay a little bit more. As you should take the client into account, as well as the work, the apps, the add-ons involved, this pricing module has used the middle point of the values as recommended by Ron. Therefore, in order to remain profitable, you do have the leniency that for every client you use a minus variance, you can add a client with a plus variance, and you're going to average out. So for this reason, for every client you take on in a negative variance, you should attempt to try to find a client that you can put on a positive variance. And that will make more sense once we actually go in and start working with the quote. Using the variance boxes, you enter the percentage you want to add in the total variance plus box. Again, we recommend up to 15%. Should you wish to lower the price, enter the percentage that you wish to lower it by in the variance minus box. Again, we recommend no more than 15% in order to remain truly profitable. And you only need to enter the whole number and no minus or plus signs. And this will total into the calculation, and the client won't be aware of what you did behind the scenes, even if they're watching you. But again, I stress, I really recommend don't price a client when you're with them. And pop over to the worksheet. So the worksheet, again, we'll blow this up. Okay, so on the worksheet, we've got a spot up here top that's from the balance sheet. Here you go. So this part up here from the balance sheet. So this is only for cleanup work. So we're going to grab points directly from the balance sheet. So and then over here is basic items. Anything in this group here is included in all three packages. Any points you put in this group here are included only in the top two packages. Anything you put in this group here are premium add-ons and are only included in the top package. That way you can get your 3 different prices at once. You've got your software. So again, this is all pulled from the other sheet. So you can't edit the software words here because you can edit them on the rate sheet. Here you're just simply putting in the points. Excuse me. And then here's your additional point section is down here. Again, you can only edit the points that you're putting in here. And then here's your variance plus and your variance minus box. Now, where you can enter over here is anything on the side here. So let's say you've got somebody that you're like, oh, no, they've got, you know, I don't do pick up and drop off of receipt, but I have something else that I want to add. You can just put in that something else. So you can edit this here. It really doesn't matter what is typed there because it's the points that pull in. And again, if the clients aren't watching you do this, it's just the points. So we'll just go through and we'll work through a price right now. So we'll go through cleanup. So let's say a client comes to you and they've got, I don't know, they've got two years that they need cleanup. So that's 24 months requiring cleanup. They've got one bank account, one credit card. They don't have a line of credit. They don't do anything cash on hand. They want that record of everything. Their receivables and payables is fine. They don't have payroll, but they do have HST, and there's no cleanup on their equity account. So this is what I would do for the points. Now, the points, the way that they are is basically 1 point equals 1 hour approximately worth of work. So if you're reconciling a bank account, you know, and again, think about it the old manual way without using all of the automation that we have to make things easier and quicker for us, you're looking at, you know, on average about an hour. So somebody's got 2 bank accounts, they've got a checking and a savings. The savings is obviously going to be less, the checking might be more. So what I do is before I firm up the quotes is I actually tell my clients, I want to see 3 months samples, most recent 3 months of their credit card statements and their bank account, just to make sure that I've kind of that I've figured this out properly. So for this one, we'll just do 1, 1, and 1. We pop over to the client sheet and we just pull down to the bottom. We'll just see here, $47.25 is the total estimated cost for cleanup work. Now that might sound like a lot, but if we take our $47.25, break that down by the 24 months. By 24, that's only $196.88 a month. So think about it. If you had a client like that, a monthly client coming in, $200 a month for, you know, to make sure they've got their HST, their and whatnot like that, that's not bad. That's not bad at all. And you don't want this client to now turn around, and you don't want to make it make it easy for them to just come back and get a cheap price. So you don't want to do too cheap. Some people might say, oh, I'll just do it for, $2,000 to try to undercut. Now to this client, there's more incentive for them to let the books pile up and to constantly drop off these boxes to you versus to try to keep everything caught up. So if they do try to negotiate down, just keep that in mind. You definitely don't want to make it easy for them and cheaper for them to keep their bad habits. So now the same client says, okay, you know what, let's go ahead with that. Can I payment plan that? Again, this is where I might take a look and say, okay, let's get to flexible payment plan options. If they're willing to now go on to a monthly plan where we can take care of their needs, keep them current, then I would be willing to take that and maybe, say, okay, we'll take so much percentage up front, 25, 50% up front, and then we'll spread the the rest of the payments out over your first 12 months. So again, you can get flexible with them if you've got a good feeling from them, absolutely, and if they're willing to sign into a contract. So the client says, okay, you know what, let's see what it is that you're pricing. So we'll go through and say, okay, so what is it that you want? We've got one bank account, one credit card, your sales tax. That stuff is still the same. It's already counted up here, but again, remember what I said, anything up here only takes into account in the backlog. It does not take into account as to the monthly price. So this same client says, you know what, I'm just really busy. I want you to pick up and drop off my receipts. And I don't like this technology. I want to do it that way. That's what the old person did. When they stopped doing that, that's when it started to build up. So I'll say, okay, yeah, let's quote you for it. Sure. This is where you start to get negotiating with the prices. Find out what they really want. So I've got that in there. Now, down here in the second part, I'm giving points for the number of receipts to process. So 1 point per 50 receipts. So let's say that they say, on average, they've got about 75 receipts for the month. So I'll put in 2 points. Scanning receipts. Well, guess what? If I'm picking them up and you're not taking a picture of them, I now have to scan them because part of my services is that we have those receipts attached to every single transaction. So I've got to scan them. Now that same client doesn't trust automation because it's new to him. It's not the way it was before. So he doesn't want to have you use the bank feed to, again, take advantage of, the type of, the type of incentives that the software has. So I'm going to charge for more. And then the premium add-ons, I just automatically keep 1 point in everything for here because if they want the full services, they're just going to pay for it regardless of what it is. Now, if that same client says they have payroll, I could very well turn around and say, okay, yes, we'll quote you with payroll. Payroll, again, if payroll would take, let's say, how many employees do you have? How often do you pay? Again, if you figure payroll will take an hour a week, about an hour a month, 15 minutes a week, add 1 point. So again, it's 1 point per hour. So as you can see, you can easily kind of go with that. So let's give this client payroll, sure. So I don't need to change that, but for your purposes, I will. So we'll change it to payroll. Now we take a look over here at the software. So what software are we including? Well, he's got payroll. So we'll include QBO Essentials with payroll. Again, this is where you could get into still using desktop. You just don't charge them for any of the software. And you could still quote them on desktop, but again, using any type of desktop software, you're not taking advantage of the technology advances. So I use HubDoc just simply because HubDoc pulls the bank statements as well as the receipts. So this client, well, you know what, we're not pulling the receipts, but I'm still going to quote him with HubDoc just simply because it's, again, if he goes over, I know it's a flat rate. We're using QBO with payroll. And that's really all that I do. I keep my apps really simple. I don't want to overwhelm it. And then over here, we wanted to, let's say he's a sole prop, we want to do his income tax. He's going to have a T2125 on there. If I wanted to add an AR package again, I could do something like that here, but we don't have to worry about that. So he just wants his personal taxes done. So when we pop over here, here's the prices. My silver package, which he's doing most of the work, so that's not the one he wants, is $383.29. $645.79 is going to be his middle package. So that's the one that he was kind of looking for. And if you want to see all everything, it's $1,039.54. That sounds high, and it should. It really should. I would tell the client, okay, this is what you've asked for. This is the package, and this is the pricing I can do for what you've asked for. How does that sound to you? Bite my tongue. Let the client give them a minute to respond. Likely, they're going to say, wow, that's really high. Or if they don't respond, I'll interject and say, I better than you were expecting. And he'll say yes and say, well, that's what you've asked for. There's different ways we can do this to get this price down. And this is where you negotiate with your services. So we'll work back here and I'll say, okay, instead of dropping off and picking up, I see you've got a smartphone. There's an app that we can put on your smartphone that you can take a picture when you're at the cash register. Send that information to me. This is what this whole system is designed to do, and these are the services that I offer. So now we don't have to worry about that. You're not paying me for my time just to be a taxi company to come and pick up receipts. Because you're doing that, I don't need to scan receipts, so we're losing points there. And, now that we're getting into technology, if you let me, we'll do, explain bank fees and say, if you let us get this set up on the QuickBooks Online, I can then be in your account, working on your account, a couple of times a week. And then I can be, contacting you weekly if we're missing any receipts. So that way, we've got, a higher rate to make sure that, or a higher percentage, to make sure that we've got everything coming, that you're not missing receipts. I'm not, coming to you 2 months later saying, well, by the way, where's half of your receipts, and you've left them in the car in the summer, and they're thermal receipts, and now they've gone blank from the heat. So it's definitely a lot more efficient. So now we'll take that point off. So then I'll say to the client, just by doing those couple little changes, we can now get you real-time bookkeeping, so I can get you your data, your information sooner. We can work together on this, and now look at how this has dropped the price. So yes, it's dropped the price on the silver one, but again, I really wasn't doing much on that one. So I'm not really going to quote them that one, but I'll give them this one, the $448.92. Again, I'd round up or round down, so I'd probably just tell them $449 a month or $450 a month for that one. And the $842.67. So right now, I've actually been able to build them two prices. Even though they're not what's on here, I've been able to give them the price of what they've asked for, and here's just a slightly modified price. Now, and again, that's including payroll, so we're doing payroll follow-up for them as well. And then if you've got somebody, again, who is, we quoted the local Chamber of Commerce, and we had to get creative quotes. So I did the same type of thing. I went in, and the first tier of quoting, instead of doing the packages as I had set up, that this is just, just your reconciling your compliance, what I did is I went in and they said, okay, this is what we're asking for. They have AR issues, but they like the way that they're dealing with their AR. They're not concerned that there's payment issues, and the system that they were using was just horrible. And they were using desktop. So I said, okay, here's one price with exactly what you've asked for. They were using desktop, and they were using a separate payroll because they did not want the staff to be able to go in and see who was doing what. So they were using ADP on their payroll. So I said, okay, here's this. We're not using desktop. We only use QBO. But here's this built in, here's what price one. Then I went back in, added, kind of changed around my software and points, and came up with package number 2, which is QBO plus payroll. So then that way they could still only have that those one or two people sign in to do the payroll. They were managing the payroll themselves, completely managing it themselves. So I didn't charge any extra points for the payroll, just strictly for the app, the cost of the app with payroll. And then I went back in and gave them an additional one with the AR through Invoice Sherpa, so that way it would automatically send them the invoices, and they could use their own merchant services. You click on the invoice, it will automatically pay, and yes, QBO does that directly, Xero does that as well too, if you're Xero users. But again, Invoice Sherpa, if you didn't pay, would turn around and send you a reminder. What was happening is their system, the way it was set up, they would issue one invoice, and if you went on monthly payment plans, it's up to you to remember to sign in every month and make that payment, versus using the technology and setting up 12 monthly invoices to automatically go out at a specific time. So it was definitely quite the presentation that we put forward for them. But again, using the knowledge that one point per 1 hour of work, and then going in here and modifying and going back, and then just grabbing that price. And again, that's when I took it into the external software, actually built the packages, or they did with the details and sent it out so that that way they had their 3 choices to choose from. Yeah, so that's basically that in a nutshell. And let's just go back here. So now the Excel template that I demonstrated today, it is available for purchase along with other time-saving templates at a limited time pricing. So the special price is available for $99.99, and the price includes a single template installation with the lifetime license. For $199.99, you can purchase a template as well as an individual session with me on how to price your clients. And I am working on an online app because, of course, people that have used it said that would be great if I could access it from the internet. So we are working on that, and I'm hoping it'll be ready for launch by fall. And for all of those who purchase a template, you're actually funding the cost of the app, so you'll actually receive a free lifetime subscription. And do you want more? You can check out my Bookkeeper's Corner page on my website to subscribe to my blog, which of course is industry-related blogs, and to find future webinars and information on my newly launched Bookkeepers Bootcamp program. There's also this link here at cloudbookkeepingservices.ca/survey. If you'd like to do a survey, it'll take you less than a minute. On the presentation today, you'll be entered into a draw for its important gift certificate. And if you've got any questions, we'll open the floor for questions now.
Thanks, Tanya.
Okay. Any questions? Or?
Hey, Tanya, can you hear us?
No, I can't. Sorry.
Well,
okay.
Carol, we just want to ask around for people right here, see if they have any further questions about your pricing. So, anybody have questions?
I actually met her back in September, and she has become an amazing model.
You met her?
Yeah, I'm actually going to do a boot camp in September, but I met her at the IBC conference.
Oh, I mean, yeah,
And
where you got
like she's really come a long way from what she's done.
Tanya, you have a big fan here. Carrie?
Sorry, yeah. So, yeah, sorry, I can't hear the question, so I'll need you to repeat it for me, Jesse. Or,
oh, yeah, it has to be close to the microphone.
Or somebody to talk louder, sorry.
Well, here's Carrie. She met you at the IPBC.
Carrie, hi, Carrie.
Wow, you've come a long ways. Like,
Yes. Yeah, so are you Carrie? You're a Black Swan as well, right?
Yeah, yeah.
Yes. Okay. See, I remember. Yeah, it's changed for me. Absolutely, it's changed everything for me.
wow.
Well, Tanya, can you
Yep.
tell people how did you transition from very struggling at the beginning?
Right.
Figure out this by yourself, because a lot of people go through all the keynote speaker, they go through all their video, they go to all the conferences, and then they still don't know how they can implement this into their business. But how did you figure out by yourself to create this thing? So give people some idea.
Right. So how did I get this? I'm the type of person, I'm like a dog with a bone. When I get something that excites me, I just don't drop. So I watched Mark Wickersham's, Seth David's, Ron Baker's webinars again and again and again. And I was already using the sheet before the Black Swan program. I was using it slightly different. So I definitely have learned so much from Ron as to the flexibility, how to get in it and customize things. But it's you know what, and it's all trial and error. My first ones, I had clients signing up like crazy. Yeah, we'll take it. And Ron said to me, this is again before in the program, I mentioned something and he put back, he says, if everybody's taking, you're too high. Oh, and or too low. And I was too low because I actually sat there and I started to time out. I used T-sheets to time out, okay, where am I? Am I on track? Oh no, I was definitely not on track. I priced myself too low because I was afraid. It was that fear that was stopping me from going forward. I was using $25 as my base rate at that point. So I've slowly put it up. Now, not everybody takes my prices. It's about 25%, which is kind of where you should be. But it's about building that package and that custom solution for the clients and, having them see the value. So I have questionnaires that I go through with them. We have conversations over the phone. So it's not just a quick, here's the price and move on if anybody wants that. We don't do that. It's several conversations. Ron suggests that you speak to them in person. I don't necessarily because we're cloud-based. We can do this anywhere. So I don't necessarily speak to them in person. If they're local, absolutely I will. One thing I forgot to mention was my original client. How did I get them over? So I added that into the presentation, but I think I used the older one. So what I did, my existing clients, I did reached out to a few and tried to talk to them about the value pricing, and I'll tell you it did not go over very well at all because they were getting all of that for free. So what I decided to do is I made an executive decision. Of course, it was only me I was fighting against anyway, but what I did is I just basically took their last 12 months worth of bills, totaled them together, divided by 12, and I said, listen, this is how I'm pricing. I'm not pricing hourly anymore. Here's your past, 12 months worth of bills. We're dividing it by 12. You now have equal payments, and then I added on, this 5% to kind of cover the cost. So yes, I'm not truly value pricing them, but that was the way to get them over. And then now their price goes up, in between 5 to 10% a year. So they're getting there. But that was really difficult for that, and I couldn't find a better way to deal with it than that. But I did take advantage of that to get rid of the clients I was not happy dealing with once I brought new clients on. And I said, okay, I've now replaced that income. Let's get rid of those old ones. So like I said, I've got about 15% left that are still my original ones. The pains are gone, and all the new clients are on this. And because now I'm able to offer them consulting services and teach them how to value price their services. Again, they talk and it's all word of mouth, and it's something that's so new in the industry. And again, for the right people, it's exciting.
So can I ask, when you get rid of those clients, you need to find somebody to fill the gap, right? How did you go after the new clients? How do you find those people who willing to accept your new pricing model and to make up all the profits you're supposed to make from those clients you get rid of?
Right. Okay, so as I said earlier, I don't pay for advertising. I've just started, I just, put ads up on Kijiji initially. I worked with, when I moved here to this area 8 years ago, I knew nobody and I had to build up my name locally. So what I did is I actually reached out to several accountants and bookkeepers, and I said to them, you know what? If you've got somebody coming, through the door, if you're, you're full, whatnot, you've got somebody who, is interested in QuickBooks Online, this is what I service. There's 3 of us in this area that actually work this way. Otherwise, everybody else that uses QuickBooks Online is using it very different. So I was able to reach, and I had a lot of accountants and bookkeepers say no, they want to keep the business themselves. But we had several that retired. So just simply by putting my name out there, I would start to get the referrals from that. I maybe, take on, at that point, I guess I was taking on, a client a month. So it's not a huge increase, but I didn't want to take on too many when it was just me, because you've got to get them, get them implemented, get them, converted over to QuickBooks Online and whatnot. Now, I have Leanne go out and do the marketing, so she does the networking, so she's involved in the Chamber of Commerce. I'm not comfortable with that, so my main avenue was, again, just those other accountants and those other bookkeepers, and being able to let them know, this is what I do, this is what I specialize, you know, and, you know, even offer to give them some, you know, some kickback or something. And that's how I started to build it initially. And of course now it's just the word of mouth. I probably get 3 to 4 referrals, 3 to 4 referrals a month from that. You know, and again, it's about 25% that we sign on. So we grow by about 1 client a month, which is it's good for me. I find if we grow by too many, it's too much. We also offer training, and I offer do-it-yourself plans, and that gets people through the door as well. So I offer $4.99, gets them 3 months of QBO and a do-it-yourself. So I'll spend 3 hours with them, train them on how to do this themselves. So I go after the solopreneur, and then, of course, then try to upsell them on one of the, you know, on one of the plans and get a relationship going. So I've been able to build it that way as well.
Okay, I have another question. How difficult was it? I know you used to do only desktop, like either simple accounting desktop. So how did you gradually move all your clients over to QBO, and how long does it take for you to actually move all the file from, say, your QuickBooks on desktop to online, and how difficult was it to try to transition your business to the new model?
It wasn't that difficult. It did take some time because I didn't want to do too much all at once again. But once I really realized what QBO, you know, had to offer, the transition from desktop to QBO, like really in the time it takes to transition a client, all of a sudden now I'm saving time so that I can now take and transition the next client. Most of my clients, I started the transition before really using HubDoc. They were still dropping the receipts off to me. And again, I do still have some of those original ones that they drop their receipts off to us. I'm trying to get them to say, well, you know what, if you take your picture, you know, we can now have that ready for you sooner instead of just at the end of every month. And so it's a slow finessing with the clients to get them onto that. But once they see and say to them, you know what, when you go to Staples and you buy that printer at Staples, if you snap a picture, it goes in your purse. You don't have to think about it again. That's a lot of incentive to the clients, and they really like it. So sometimes it takes a couple of times, but for the most part, they don't realize what software I'm using. They don't care, just because they just want us to do it. They're not that interactive, and most of my clients use a different method for the collecting of their invoices or their accounts receivables. Like they're using, I've got some niche clients. I've got, you know, a physiotherapist office that they use their special software. You know, I've got construction that they use their special software. And so all I'm doing is I pull the reports monthly. So they're not even in QBO at all. They don't care what I use. They just, again, I teach them how to snap the pics and do what they need to do, and that's about it. So it wasn't a difficult transaction, or I guess a difficult process. I probably did it within it probably took a full year to a year and a half, and that's to get the last of them, but those were the stragglers. I did everything really within about 6 months for the most part of it, and just as of January, I officially do not service desktop anymore. I have one client who is on desktop just because they need to be. Their file is so complex, but with the exception of them, and they were my first clients in this area and have been with me 8 years, so with the exception of them, if anybody calls me and wants desktop, I actually refer them to another local bookkeeper. I have no interest in dealing with desktop now.
Great, thank you. So anybody else has any other questions we haven't covered? That was great. Thank you, Ken.
Yeah, thanks. Well done. Thank you.
Oh, great. Oh, you're very welcome. Well, if anybody does have any questions, feel free to reach out. You can find me on Facebook, send me an email through the website or whatnot. But like I say, I'll get this recording into Jesse. And then Carrie, I guess we'll probably talk on Monday, won't we?
Yep.
Yeah. All right. Well, again, thank you very much for having me. Hopefully you guys, learned a lot. And yeah, that's great. And thank you, Jesse. And I guess we'll talk to you next week.
Yeah, thank you so much. Again,
Perfect.
So
Okay, great.
So I should let you go.
Great. Well, thank you. Have a great night, all.
Yeah, looking forward to see you.
Yes, absolutely. Okay, thanks. Take care, everybody.
Okay.
Bye.
Bye.
Okay, thanks. Bye.